Hi, this is Pat with Energy Solution Partners sharing with you our energy market view on Friday, February 7th. Keep in mind there is a risk of loss when trading commodity futures and options. I'm going to spend my time today taking a look at the gasoline market. We've been focusing on the diesel here for our last several commentaries, and not a whole lot has changed there. We're still at some very low diesel inventories, and demand has remained high, especially with the cold weather setting in. So, not a lot new to add there, other than we continue to watch those low inventory levels. But as we look at this gas market, a couple things I want to point out on the refinery utilization rates here as we came into 2014. We were running just off the charts here, well above 92%, at the highest levels we've seen in the last several years for this time of year. And with that, we look over on the right then what our gas inventory has done, and we've basically just maintained, and it's right in the same ballpark as where we've seen the last few years for this time of year as far as inventory goes. But again, keeping in mind that we've barely maintained with the refineries cranking all out here. So I guess we want to watch this as we come into our seasonal tendency for these refinery utilization rates to drop as we come into our spring maintenance schedule for these refineries. So as the refineries make less product, we would expect those gas inventories to drop. As we look forward here, something that's been on my radar screen since we rolled from the August futures to the September futures, and I think this is a pretty good target to look for. But the gap in the chart, and again, what I mean by the gap is when we rolled from the August futures to the September futures, we left this big hole in the chart here. And for the technicians that look at that, they don't like to see those gaps in the chart, and we typically come back and fill those. So by filling that, that would be over here at the current trade, and we'd expect to see this move up into this range here to fill this gap that sits over here. Also, watching the money flows here in the commitment of traders report and the flow of managed money, which again is the speculators. Now this report comes out every Friday. I just received this report today, but it is dated when it does come out. This is a report as of Tuesday this week, so this would be as of February 4th. But you can see the green line here is this year's open contracts here. The traders do maintain a long position overall. But we're sitting today at about 25,000 contracts in a long position, quite a bit lower than we've seen the last couple of years. A year ago, this same group of traders held over 90,000 contracts in a long position. So gasoline has not had the attention of the speculators again. And even this last week, we did see money come into the crude oil and the heating oil markets where the speculators added to some long positions there. But for the time being, they left gas behind. But again, I think this is just a matter of time. I'm not sure what makes these guys tick or when they decide to bring their money into the market. But just looking at the setup here and knowing how quick they can push this market and bring money in, this is something to keep an eye on, and knowing there is a lot of money potentially on the sidelines just waiting to come into work here. With that, if we look at the gas trade just over the last 3 days, this would be Wednesday's trading action here. And again, keep in mind the commitment of traders report is as of Tuesday, so that does not factor in any of Wednesday's trade where we moved up 4 cents. Thursday we moved up another 4 cents, and then today on Friday we moved up 6 cents. So as we get next week's commitment of traders report, I would expect to see they probably brought some money to work here, and that's why we've driven this thing up. And in just 3 days now, we've watched the RBOB futures contract jump by nearly 15 cents a gallon. Continuing on with some of the trends and seasonalities here of gas as we work towards spring, and this is information from our friends at More Research. And in the blue shaded area that I put together here, the May gasoline contract has moved higher 15 out of the past 15 years in this time frame, and that's from January 27th to March 31st. So 15 out of 15 years is pretty convincing, and I guess it's hard to fight that trend that's in place, and we're well in that window here. And with the seasonal trend, this gap back over here, I think a lot of things are pointing to push this gasoline market higher. With that, keeping it short here today, just point out a few things that I'm watching in the gas market. If you'd like to take a look at some stuff there, whether it's physical contracts or some financial positions, liking the way the gasoline market is shaping up here, especially after the big moves here the last couple days. It looks like maybe the market's waking up here a little bit. We do seem to be focusing an awful lot on the stock market, though, and looking for some confidence on that side. If we get some confidence that's coming back into the equities, it's going to spill over into the energies and commodities here. But if we do turn back defensive here, then I would expect energies to stay defensive as well. So we're not necessarily off and running here with a total green light with a few things going on in the backdrop here. But overall, I think we are set for a pretty good run. So with that, feel free to give us a holler. We'd love to visit with you. Thank you.